If you're someone who's invested in cryptocurrencies, you're going to want to keep on watching. The price of Bitcoin is down near 52-week lows at $30,000. The price of Ethereum, Solana, and Polygon Matic have all gone down to their 52-week lows. And now what investors are wondering is this the end of the crypto bull run? Or is there more to go, and is there upside? And so keep on watching, because today I'm going to break down exactly what's going on with crypto, where I'm invested, and what I'm doing next to prepare for the opportunities to come after this next crypto crash. My name is Mark from Personal Finance for POCs. This is a channel where I talk about crypto, about finances, about my own personal finance journey. If you're interested in that, please hit the subscribe button and keep on watching. You may have noticed over the last couple of days headlines talking about the crypto crash. Cryptocurrencies have been an incredibly volatile asset, with the majority of cryptocurrencies actually losing value over the course of 2022. And if you look back from all the way this time last year, Bitcoin, the world's biggest cryptocurrency, has actually lost over half of its value in that time, going from near $60,000 now to $30,000. And if you're wondering why the price of Bitcoin has been so fluctuating, and especially has declined over the last couple of days, I'll break that down for you. The first reason that crypto prices have declined over the last couple of days, and especially in the last week, is because of something called the federal funds rate. The federal funds rate is controlled by the Federal Reserve. They're a governing body that controls how expensive it is for anyone in the United States, whether you're a consumer or an investor, to borrow money. The Federal Reserve actually raised the federal funds rate last week by 0.5% or 50 basis points, and announced that over the next couple of months, they would progressively raise the interest rate again by 50 basis points for each of the next two meetings. That means we can expect over the course of the next 1 to 2 months, a Federal Reserve rate that has gone up from 0.5% all the way up to 2% in less than a quarter. That means if you're someone who's looking to borrow money to invest or looking to borrow money to buy a house, it just became significantly more expensive for you to borrow that money, and your interest rates have actually gone up. Now, why that matters for the cryptocurrency market is for two reasons. First, there's some concerns among investors that the entire economy is starting to slow down in general. If the economy is going to slow down because it's harder for people to borrow money, then there's some concerns that Bitcoin will also suffer a similar decline as the rest of the broader market. And so in that way, people are starting to pull their money out of cryptocurrencies like Bitcoin and Ethereum. Second, there's been tons of videos out there that have talked about the use of margin or the use of loans in the crypto market. The cryptocurrency market is actually much more margin dependent than the overall market. So the concern is, as the price to borrow goes up with the federal funds rate, people will actually no longer be able to afford the interest payments on their cryptocurrencies and be forced to close their positions, further causing a downturn on the crypto market. That is one way how the cryptocurrency market is impacted by the federal funds rate. The second reason cryptocurrency markets have gone down is because crypto is considered what is called a risk asset. A risk asset is something that is considered risky, and so it is likely that it will increase a lot in value over time, but there's also a lot of risk associated to it. So you actually could lose your money in that time as well. And high risk assets like Bitcoin and cryptocurrencies tend to do really well when the market is euphoric and really excited about the prospects of growth, and tend to do actually quite poorly when the market is nervous about changes that are going on in the environment. So as investors start to take more of a risk off strategy, which is to say they're starting to move from high risk, high reward assets like tech stocks into more stable assets like energy stocks and companies that have cash flow positive dividends over time, crypto is seeing similar withdrawals as investors start to fly towards safety. And world events like the war in Ukraine actually just serve to increase anxiety among investors, which means they cause further outflows from risky assets like cryptocurrencies and tech stocks. Third, along with the price of cryptocurrency going down, there's a bit of a compounding effect as people who have borrowed against their cryptocurrency are starting to get margin called. The way this works is if someone has borrowed money against their cryptocurrency or against the value of their cryptocurrency in order to increase their stake in that currency, when the price of that currency goes down below a certain amount, their crypto exchanges might actually require them to sell off their assets to pay back their loans. What that means is anyone who has a high degree of margin within their account is starting to see their cryptocurrency accounts be margin called, which results in further selling and further decline in the price of cryptocurrencies like Bitcoin and Ethereum. So if you're someone who's wondering what to do with your cryptocurrency or your Bitcoin portfolio as the price of these cryptos start to decline, what I would suggest, and again, this isn't financial advice, but what I'm doing and what I would suggest to you is to hold on to your crypto if you're invested in the long run. If you're someone like me who believes ultimately crypto is going to be a much larger part of the economy than it is today, then all these price reductions do today is give you an opportunity to buy crypto at a lower price than it was available in the past. That's exactly what I'm doing right now. And as the price of Bitcoin, Ethereum, Solana, Polygon Matic, etc. have gone down over the last couple of days, I have actually continually invested more and more into these cryptocurrency assets and taken advantage of the price reductions. I did the same exact thing last year when the cryptocurrency market crashed. Bitcoin was trading at 28,000 and Ethereum was trading at 1,700. Those were amazing buying opportunities. And if you were someone who was willing to get aggressive while others were fearful, you made out like a bandit in that market. And I'm hoping to do the same exact thing here. And if you're someone who doesn't like to try to find ways to time the market, I'm like that also. I don't want to have to worry about when do I get in, when do I get out. I don't like to actively day trade. And I like to think of myself as a long-term investor. If that fits your profile as well, look into dollar cost averaging into cryptocurrency as opposed to just buying it all in today. Because there is some likelihood that the cryptocurrency market will continue to decline over the next couple of days or weeks or months. And so what you don't want to do is invest all of your money today, have nothing left over on the sideline for the next dip or the next decline in price from here. And so what I would actually recommend if you're worried about that type of scenario, put in an automatic trading schedule. A lot of the platforms out there like Gemini, Coinbase, Robinhood allow you to do this in their platforms where you can invest a small amount of money daily from your bank account and not have to think about the price of cryptocurrency at any given time. I have been doing that for the last 2 years or so. And what I've noticed is I sleep much more easily at night, not having to worry about the price of crypto as it fluctuates day to day. The other thing I do is I try to use cryptocurrency in a platform that will allow me to lend that crypto out and make some extra yield on top of my money through crypto lending schemes with some of the exchanges that I'm working with. If you're interested in learning how to invest like I do and actually gain some interest on your cryptocurrency, check out the video up above where I talk about that more. So guys, that has been me talking about why the cryptocurrency market has crashed over the last couple of days, where it might continue to go over the next couple of days, and what I'm doing as an investor despite the fluctuations in price. If you find this video interesting, please consider hitting the like button down below and consider subscribing because I post more crypto content like this all the time. I'm a newer YouTube creator, and so if you want to support someone newer to the scene, consider hitting the like and subscribe buttons down below. And if you have some comments about what you're doing within this crypto crash environment, please hit the comment section down below. I'd love to hear from you, figure out what you guys are doing, and learn more from this community as well. Thanks so much, and I'll see you next time.